Principles of Accounting 1, Chapter 1, Short Exercise 6. We are looking and analyzing the accounting equation once again, and now we're going to add the analyzation of net income. So we're going to have to be able to do a couple of different things in solving this problem. We're going to have to take into consideration our accounting equation and all the aspects of the accounting equation, and then we're also going to have to talk about how the net income filters into that accounting equation, or how we can solve for net income from the accounting equation and additional information that is given to us. So we have our company who had assets of $280,000 and liabilities of $120,000 at the beginning of the year. Then it tells us that our assets were $400,000 at the end of the year and liabilities were $140,000 at the end of the year. Then it goes on to say that the owner invested an additional $40,000 in the business, and then the company made withdrawals of $48,000, and it wants us to determine and calculate what the net income for the company was during the year. So the first thing we're going to have to do is we're going to have to analyze our accounting equation and solve for our owner's equity at the beginning of the year, and then again for our owner's equity at the end of the year. Then we're going to take into account additional owner investment, company withdrawals, our beginning owner's equity, our ending owner's equity, and we're going to look at the equation necessary to actually solve for the net income for the company during the year. So let's begin. So at the beginning of the year, this is what we have. We have our accounting equation, assets equal liabilities plus owner's equity, and our assets are $280,000, our liabilities are $120,000. So if we use the equation and solve for owner's equity, we end up with $160,000 of owner's equity at the beginning of the year. And now we need to figure out what our owner's equity is at the end of the year. So same situation, we have assets equal liabilities plus owner's equity. We have $400,000 in assets, $140,000 in liabilities. So once we plug it into the equation, we end up with $260,000 of owner's equity at the end of the year. So we went from $160,000 at the beginning of the year to $260,000 at the end of the year. So beginning 160, ending 260. And now we're going to need to solve for net income. So the equation that we use for net income, which is similar to the equation that we use when preparing our statement of owner's equity, we're going to take our beginning owner's equity, we add in any net income that the company has, we add in any investments that the owners made throughout the year, and then we subtract out any withdrawals. And that equation solves for our ending owner's equity. So we have everything that we need to solve for net income. So rearranging the equation, our net income is going to be equal to our ending owner's equity plus our withdrawals minus our beginning owner's equity and minus our investments. We just simply rearrange the equation using simple algebra. So what we have is we have our net income is going to be our $260,000, that was our ending owner's equity, plus the $48,000 withdrawals, minus $160,000, that was our beginning owner's equity, and minus our $40,000, that were our investments, and we end up with a net income of $108,000 for this company for the year.